Ifeoma Onyejekwe, fixed income dealer at UBA, joins me for a midweek review of the fixed income market. Ifeoma, thank you for joining us today. Bring us up to speed on overall market performance today and also market sentiment after the Treasury bills auction today.
Thank you, Esther, for having me. I'll start with the beginning of this week. The Treasury bills secondary market opened the week on a very mixed note on account of system illiquidity as the Central Bank of Nigeria carried out industry-wide TRR debits last week Friday, which depleted system liquidity to over 200 billion naira from about 800 billion naira. But trading picked up on Tuesday as over maturities of 133.06 billion trickled into the system, propelling some bullish trades, especially on the longer tenor Treasury bills. We also witnessed a continuation of bullish trades in today's trading session, done in expectation of lower stop rates at today's NCB primary market auction, where the Central Bank, on behalf of the Debt Management Organization of Nigeria, is set to offer 130.60 billion of Treasury bills at the auction compared to 150.60 billion of maturing Treasury bills. The auction was very well attended by both major and minor market players who are all anxiously waiting for the release of stop rates, usually announced near close of business hours. So right now, we're still all very anxious to see what the stop rates will be. However, overwhelming market suggestions point to the one-year Treasury bill stopping at 0.15% levels from last stop rate levels at 0.3%. And compared to the Treasury bill space, the bond space was more active this week as trickles of demand filtered into the market, particularly on the short and medium tenor segments of the bond curve. We also recorded bullish activity today on the long tenor bonds, particularly the 2035 and 2045 papers, which are the auction bonds, as parent orders to sell these trades. At the MPC meeting on Monday and Tuesday, the central bank, in addition to maintaining all key policy rates, also iterated its expansionary plans to keep a low interest rate environment. Therefore, we expect interest rates in the Treasury bill space to inch closer to 0%, with a slight chance of sliding into negative risk, while the bond space experiences sustained bullish actions as more risk-averse investors increase their presence in that space, also propelled by close to 2 trillion naira of maturities expected from now until the year end.
Now, with interest rates in the secondary market hovering near negative stop rates, could we see an uptick in rates if we do see investors abandoning this side of the market for higher bond yields?
No, not for now, because we still have a lot of liquidity coming into the market. In December, we have a lot of own maturities as well as NCB maturities. So there is plenty of liquidity, and we know that pension funds as well as some other financial institutions, they are mandated to invest a certain amount of their assets in fixed income securities. So an uptick in rates is only expected next year, but from now to the end, we still expect further decline as liquidity still abounds. So we'll still see many investors coming to play in that space, irrespective of the low level of risk.
Let's cross over to the FX market to bring us up to speed on how the market traded today. We know that there's still a backlog of demand that the CBN is still trying to clear the offshore demand, of course, while still keeping an eye on the FX reserves. And yesterday at the MPC meeting outcome, the CBN didn't particularly dwell on developments at the FX market since its previous meeting. But what signals did the market receive? And my first question, how did the Naira trade today?
Well, the Naira traded in the R&E market at around 385 levels, while parallel market rates also increased about 484, 485 levels. And yes, you rightly said what the CBN governor said in the NCC meeting on Monday and Tuesday, and we still saw some interventions in the R&E market. We see the CBN continue to intervene, and when the foreign loans expected next year coming, we'll also see more of this backlog being cleared in the market, while speculations continue to drive the Naira on a high level.